The gold price has just made a new record all-time high. Banks are now jumping on the bandwagon, with ING saying that the gold rally is just getting started. Bank of America also sees gold hitting $3,000 an ounce. If you haven't reached out to us at ITM Trading, I strongly urge you to book a strategy session where someone will reach out and connect with you and educate you about creating a wealth preservation strategy centered around owning physical gold and silver. You can easily book that in the Calendly link of the description of the video. Do it, you won't regret it. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here on ITM Trading with my guest that says the numbers are not true. They are lying to you, and the market is actually starting to roll over. And could the markets actually be overvalued by 150%? I don't think that's hard to believe. Please welcome back to the show America's favorite professor, Dave Collum.
You apparently have not talked to my class this semester. I have been hauled into the principal's office several times
because they watch this show and say, "What is he saying?"
No, that's my business. Because I was voted class clown in high school, if I remember correctly. And so humor spontaneous. There's always an edge in every joke, right? It's not a joke if you don't find some slightly sharpened edge. And the modern generation has no sense of humor because they don't think that's fair.
Well, I said this opening, it's obviously focused on the markets. We're going to talk that today, but I do want to share that my favorite conversations with you actually have nothing to do with the economy, but people do want to get your thoughts on how you see things, Dave. I mean, I don't want to swear and use profound language right now, but I mean, it's just a total mess. So I want to get your read. We're how many days away from the election now, on how you see the state of affairs. Let's start market-wise, economically speaking.
Well, timing is always difficult. And people say if you're early, you're wrong. Depends on how big your call is. If you're going to say, look, NVIDIA is going to drop 10%, and then a year later it hasn't, then you're wrong. In 2002, I wrote about 5 pages as to why the banking system was going to collapse. And I was 5 years early, but one prominent blogger named Paul Kudrowski made the "if you're early, you're wrong" statement. And I sent it to him, and I said, was I wrong? He said, no, you were brilliantly correct, because it's a big enough call that being 5 years early doesn't matter. So when Nouriel Roubini, I beat his ass to the punch on that one. So I don't know when regression of the mean is going to occur, but the fivefold, 150% overvaluation is based on a pile of metrics. What I've discovered doing podcasts and reading comments and stuff is people don't understand what a valuation is. The cluelessness is actually rather staggering. They go, well, we're going to debase the currency. I go, it's still overvalued. I don't care. When you have a valuation, it's the price divided by something that should track it, meaning they're both inflation sensitive, the numerator and the denominator. So it's price earnings, price revenue, price to book, both of those are sensitive to inflation. So you can't debase away an overvalued market. So I've been trying to come up with the magic way of saying the consequences of being 150% overvalued. And let's take a round number. There are stocks out there priced with a PE of 100. Turns out the triple Q is priced at 100. You go, no, it's not. I've looked it up. It's 23, 24, 25. Turns out the way they calculate it, it's a fraud. It is a fraud. And Horizon Kinetics went through it and said, here's what they're doing. Here's the fraud, and here's what it really is. And it's 100. So if you're priced at a P of 100, you're priced to earn 1%. It's just that simple. Think of it as a bond. Now, you say, oh, yeah, but the triple Q is a bunch of growth companies. So I say, okay. Let's be optimistic. Let's say that the triple Q doubles its earnings. Inflation adjusted doubles its earnings, right? Not just the money supply increases and therefore you gain nothing. I'm talking a real doubling of earnings, which would be heroic, right, for these 100 tech companies. Now you're priced to earn 2%. And so let's say, well, they double their earnings again. Well, now you're priced to earn 4%. You're priced to double them again. You're priced to earn 8%. And so you realize you could increase earnings 8-fold in that, and the triple Q is still not that cheap. And they say, well, but inflation will take it up. I go, but that's you're earning nothing when inflation is doing the lifting.
Right. It's just pretend.
And so and the valuations account for inflation. Price divided by something, both of which inflation change with inflation. And so I find that the people who don't understand this basic idea of valuation, the number is staggering to me.
You say you will be so angry with yourself for not getting out of the way of that disaster.
Well, I am out of the way, so I'm not going to be angry with myself.
So what are you do? Are you completely out of, you're not out of equity. So are you just buying like cheap devalued stocks right now?
No, I'm about 10% equity. So my equities could go to zero tomorrow and I'd have a bad day.
And the rest? What's the game
plan
right
now? A
lot
of two-year treasury flavor, 2-year treasuries, a lot of gold. I have some gold mining stocks. The gold miners are widow makers. You have to go back to the 1930s to find real success stories. I know I'm torching your clientele, right? Probably all your sponsors are projectile vomiting right now, but
no sponsors.
But,
so it's fine.
Oh, that's good.
We could speak the truth.
So I was buying gold from 270 up. I was buying it actually from 290 down back in 99. And I finally said, look, I can't take any more pain. The Nasdaq's going straight up. Gold's been dribbling down. So I bought all my gold between 290 and 270. And then it started its trek up. And I actually spotted the indicators when the Bank of England said they were going to sell more gold and the price went up, not down. And then they actually sold some and the price went up, not down. I've told the story a million times. I was on Cornell Economics Report. I don't know if you remember that.
Yeah, of course. Al Corlin?
And I told them that. I told them that. And I said, something has changed. The Bank of England is no longer jerking the price of gold down despite their best efforts. That became named the brown bottom. But I didn't, I had friends when gold was at 310 or 320 saying, oh, you should sell. It's at a high. Well, and I held on and then I bought it up to about 457. I remember a fateful day when some guy told me it was a top, and I told him that he only had 4 guys buying gold from him, and 3 of them were my friends. And then it got to 1900, and I thought I was king, and then it dropped back to around 1,000, and it sat around 1,200 for a while. And I bought another wad at 1,200 when it looked like it had gotten boring again. And that turned out to be, for a while, it felt like just dead money. But if you look, you go, that was a pretty good call. It was, sort of a doubling, a little more than a doubling in about a decade. And if that's not enough for you, you're too greedy. You're going to lose a lot of money if that's not adequate for you. And the miners, by the way, during that first bull, during that noughts, the bull of the noughts, the miners, gold went from 256 up to, stabilizing at 1,200, right? Through 1900. The miners gave it all back.
Why do you like having gold in your portfolio?
Well, as I think I said last time, I don't like gold in my portfolio, but I have to have gold in my portfolio. I'd really rather own equities, but they're too expensive. So I like having gold now because I think there's a pretty decent chance that the euphoric gold bulls are going to be correct. And I don't know what's going to tell me to finally get rid of my gold. Possibly nothing. But Jimmy Rickards used to talk about gold. If you priced it according to some historic something or other, gold would be $49,000. I go, yeah, but we're not going to get the $49,000. Not without the dollar going to basically Zippo. But I do think the next few years, I think the enthusiasts could be rewarded.
On that point, Ray Dalio just said in an interview, if you don't own gold, you know neither history nor economics. He went on to predict that within the next 18 months, we may witness a significant economic contraction and a restructuring of debt and finance that will catch many unprepared.
I read his book. I think Ray, at some levels, a hoser. He pontificates about macro, and I don't think he's as smart about macro as he pretends to be. That's not to say he's not smarter than me about macro, but I think there's a bit of a charlatan in there. But he has attempted to learn it. and he wrote that book. I can't remember the title, but I read it. And it's basically sort of a fourth turning repackaged book. And he argues he has six chapters of each cycle, and the sixth one is when it gets murderous and there's a war cycle and stuff like that. So he's been bearish for a handful of years now. He's not been a bull for quite a while, and so I've heard him say things just like what you just said in past interviews. And so Ray and I are on the same page in that sense. And I once talked to one of Ray's contemporaries, one of his peers, and there are not many guys you'd call peers, but and he said, I made my critique of Ray's macro not being what I thought it was. He suggested Ray was the total shyster, and I was all shocked by it. He says, I now believe, and if you think you know who it is, don't mention his name because I don't want it to come out, but you know the name. You know the name.
I know who it is. Yeah.
You do know who it is. He says, I now believe that Ray does have a hedge fund. And I go, you didn't think he did? He said, I wasn't convinced. That's a pretty weird statement, right?
It's a pretty weird statement.
Yeah.
So he's convinced now because he feels Ray's trying to lead people down a certain path?
I think he sees through Ray's persona and sees something darker.
Okay. Bigger picture, though. Dalio also speaks, his concerns are centered around the levels of debt assets and liabilities, which have soared to what he sees as unsustainable, as an unsustainable trajectory. I bring this up because I know you've been very vocal about what we're seeing on the electoral front. And there's been no talk of the economic crisis here in the US, right? We're painting the picture, the markets are great. No one's talking about the debt, right? No one's talking about all the spending.
I would not agree with that. I think that right below the surface, I think a lot of people, some people would say, look, we're climbing the wall of worry because people don't believe these markets. So there's this disbelief that often accompanies the sort of slow grind upwards, right? And that we have not hit the euphoric phase. But I actually think this phase is just a different flavored one. I think we're probably near a top because it's so overvalued. It's like a Jenga pile, that's so tall now that I think it's got to collapse at some point pretty soon. What troubles me the most, and it's consistent with Dalio's fears and fourth turning fears, is that if you think of big market tops, and I think this is one of the fakest bull markets. The last 10, 15 years, I think, has been a really fraudulent bull market. I don't think it's based on a real pump and dump by the Fed, and it's based on the Fed kept rates too low for too long, too many times. I think they overstayed their welcome so profoundly. Greenspan was bad, and it just got worse. And so I don't think we can get out of this one without pain. But we've never been at a market top that I know of in which people were so grumpy. Now you can say, therefore, it's not a market top. I'm saying no, therefore, when we go down. And so you take a grumpy boomer and cut their retirement in half. You now have a grumpy boomer of another order, right? And that's, I think, a real problem.
I think you tweeted somewhere that the
I'm told.
Fed...
I'm told.
And maybe you were quoting that the Fed, we were questioning, will the Fed now go wobbly in the knees and feed the beast what they want, which is inflation? The sentence struck me, Dave, because I'd like for you to go a little deeper there. What do you mean by that? Why? First of all, who's the beast, and why feed inflation?
The system, the financial system, is the beast.
Okay.
This is this thing that just devours money.
And they want to pretend they're fighting inflation, but they don't really want to be because they need to feed it. What is it?
My thesis is actually that we've misread them, and it's now backwards. And that is that everyone talks about Powell being a swamp creature, and that he'll just do what every central banker does, and that is feed the beast, right? And so when the beast demands money because it's dropped 10%, and we just cannot tolerate that, that sort of thing. Once the real selling starts, the system becomes an emergent system. meaning that it's not mathematically predictable. Emergent system is sort of a chaotic system, and so the rules get thrown out, and you think, well, it's got to stop now, but it's got a mind of its own, and I think we'll get into that mode again. For years now, I've been emphatic about how duration risk is much greater than price risk, and I used to just call it time. I think it was Paul Singer who said duration, and so I said, okay, I'll use Singer's language then. I think we're saying exactly the same thing, and that is that time kills you way more than price. So if the price dropped 50% today, we could dust ourselves off and start over and do that. If it takes 15 years to drop 50%, you've not only given up 50%, you've also, and this is inflation corrected. Everything I say has got to be inflation corrected. I know nominal, but you're not making any money when you're making it nominally, right? So that's back to the ignorance of the masses, not knowing what a valuation is, not knowing everything should be inflation adjusted. One time I sent an email to Lacey Hunt, he adjusted for per capita. And I said, it's great to adjust for per capita because the market gains over the last 100 years, you have to correct for the fact that the population is 4 times bigger. You have to correct for the fact that the world is feeding off this big pizza pie, not just us. So we're sharing this booty with way more people, and therefore, on a per capita basis, we're not as rich as we think. But the point being is I think the correction, which I define as correcting both price and attitude, because as long as the dip buyers are happy to be dip buyers, we haven't corrected anything. I got into it with McClellan. He said it, he says a correction is anything that goes against the trend. I said, no, a correction implicitly in the word. I don't care what the formal definition on Investopedia is. Correction inherent to the word is that it actually fixes something. And if you drop 20% and a year later you're back up, you fix nothing, precisely nothing. And so you have to change investor attitudes, and the way you do it is you knock them down and they get up and they get back in the game, and then you knock them down and then they get up and they get back in the game. And so it's a prize fighter who by the end of the fight is punch drunk, and then you have finally whooped that guy's ass. And so I think this next correction is going to be 3 steps forward, 2 steps back, 3 steps back, 2 steps forward. And it's best model. Again, historical models are dangerous because history doesn't repeat. And if you ever hear me say, but it rhymes, just shoot me now, because that's the most trite phrase on the planet.
Okay, but you're calling it a correction, not a crash.
Crashes don't correct. We drop tomorrow 30%. How many people would be uncorking and buying all their favorite, buying NVIDIA, buying you name it, right? Crashes don't correct anything. Unless we get one like the 1929 to 33. Then you take it down to 90%. I'll buy a 90% drop.
So you don't see a 2008 scenario brewing?
No, because I don't see us recovering. I see 2008 without recovery. They spent $30 trillion pulling us out of that. I don't think they can do that again.
What do you call that?
Nikkei. It's the Nikkei. It's the U.S. 1967 to 81. 14 years. Nominally, you treaded water. In real dollar terms, you lost 70%. Losing 70% is a bitch. Taking 14 years of your life. How many years of investment lifetime do you have? I'd say 45 years. You're a kid for 20. You're a defensive old man or old woman for the last 20. So you got about 45 years of investing. Probably you only make money in half of those years. So to burn 14 years losing 70%, like we did from 67 to 81, it's not just the loss, it's the fact you went from being 35 years old to 50.
So how far away do you think we are from that? Are you talking years, months?
Well, we're years from the finish. How's that? We're decades from the finish.
Aren't they going to do everything haven't they been doing everything to avoid that?
Yeah, inflation.
But you're saying at one point the system just breaks. They can't keep playing those cards.
So we're already getting gutted by the inflation. So our debt's going up 7%. GDP, inflation corrected correctly, grows over the 20th century, grows around 2.2%. People think it's higher. They grew 5%. No, not even close. Ask Howard Marks. Ask guys who are that smart. It's in the very, very low two. Some say 2.0, not 3.5. And
This is, yeah.
And so if and the growth in the GDP really is operationally the gain, except for I kind of mentally break your gains into two pieces. If you owned a gas station, whatever you earned at the end of the year, you pay yourself. That's your profit. So those are the dividends. If for some reason you're growing a chain of gas stations, those are the capital gains. And so I think that if we have no capital gains between now and 40 years from now, we will be at historical normal valuations. Meanwhile, all you got were dividends. What's the current dividend rate? 1.5%. Now, I say the market's 150% overvalued, call it threefold, fourfold overvalued, whatever you want. Dividends through the 20th century averaged 4 when things were cheap. They were 6. So if you use dividends as a valuation metric, you say, look, they were paying out 6% then, they're paying out 1.5% now. You're threefold, fourfold overvalued.
That's just terrifying what you've outlined. I mean, my next question
I'm the only guy doing this, Hussman. But Hussman, they've discredited him because he was too soon, that sort of thing. And he's attempting to find a way to deal with raging bull markets that shouldn't be, but are. And so he's trying to find some magic ingredient that allows him to stay alive during these periods of craziness. I, on the other hand, just go to the sidelines, go up like 10 rows up and hope I'm out of the splash zone. But I have that luxury. He doesn't.
I love how you say periods of crazy. Our mutual friend Mark Cahoda says that's exactly what we're living.
Bastard, Mark Cahoda.
That's what it says. What we're living in. So if I was to ask Dave, for you, what is the biggest threat to America today, facing America right now?
The end of the American experiment. Period. We've had a 250-year run. The biggest threat is it's over. Now, we have resources. We have inland waterways. We have a fairly educated population. But we've also had a fairly free society. And if the society clamps down, and I see all sorts of indicators. For example, my hatred of the Biden administration is the weaponization of the justice system.
And we've spoken about that.
All the other things they've done are bad, and I think Joe is a bad person. I think he's a criminal. I think he's been a grifter his entire 50 years in politics. All that aside, when they weaponize the justice system, and it's not just weaponized against Trump, it was weaponized against Daniel Penny, it's weaponized against anyone within 100 miles of Trump. So here you got, Peter Navarro does 4 months in prison. He's just a former UC Irvine economist. He finds himself in prison, and next thing you know, the lawyer Sidney Powell. If you were in the Trump inner circle, Michael Flynn, these guys were all looking at hard time. And you can say, well, no one's above the law. And I go, well, apparently Biden is. Apparently the Democrats are. And what they don't understand is that the great risk is that when the power switches, we'll turn on them. And I have a mixed emotion. Let's say Trump gets elected. One side of my brain says move forward. The other side of my brain says hang some of them. I think Merrick Garland should be brought in front of a grand jury and tried for treason. I think Mayorkas should be brought in front of a grand jury and tried for treason. And I can make the case. It might not be formally the definition of treason. Treason is a complicated word in a legal setting. But skanky, treasonous by design. I think anyone who knowingly let 4 million people a year race across that border, regardless of how dangerous they are, is not in any way, shape, or form supporting the American system. I'm not against immigration. But that policy has so much potential to truly destroy us. And so if we have to, I'd say just shut the borders down, period, QED, right now, down to 0. to get control of that situation.
End of the American experiment. That includes end of the dollar. And
oh yeah, that'll be the first thing to go.
But the U.S. obviously sees this unfolding. Trump has made it clear he will tariff 100% countries that continue to shun away from the dollar. What playing cards does the U.S. have to counter the BRICS rise?
I don't know. It might be too late. We might have already played the hand wrong.
You said you were.
Would you trust, based on what we did with the dollar, when we turned the dollar into a weapon?
Yeah.
If you were some foreign country that you're sitting going, okay, you know, what is it like being our ally? Well, at one point we were doing okay with Gaddafi. He's not dead. At one point we were doing okay with Saddam. He's not dead. Right? Being our ally is dangerous because the minute you're not our ally, we cap your ass. We destroy your country. And so all of a sudden we weaponize the dollar. We said the absurdity of this. So there's all these Russian companies of which the world had part ownership of. And we declared them, you were not allowed to own them. What did we just do? We handed all those companies back to Putin. I had some RSX. We handed it back to Putin. He now owns those companies 100% again because we said we refuse to own them. That's insanity.
I want to get back to the banking crisis. You were 5 years early in calling it. You've obviously seen the news of Buffett dumping his Bank of America stock. Are you closely following that? Do you think there's something there?
I'm not closely following it, and it could be two things. One is it could be Buffett. Buffett lamented in 2000 not getting out of the way. You know, he owned Coca-Cola, which is one of those companies. Buffett's a hoser, right? Buffett is a stock jobber. No, but he's brilliant. He's brilliant. But Buffett's the mafia don who walks around in a bathrobe trying to look undangerous. When in fact he the things he does at market bottoms to save the system in cahoots with the Federal Reserve would be criminal in every respect. It's all insider trading. But that's the luxury he has by being Warren Buffett. And he trades. I mean, he does stuff. He talks about how derivatives are bad, and then he uses them. And so he's been a bit of a hoser, but brilliant. But he owned Coca-Cola, one of these companies that he likes to pretend, I'm just a little old guy owning Dairy Queen and Coca-Cola and Mars Candy or whatever, and See's Candy. But he owned Coca-Cola with a P of 44. He was kicking himself. He said, I own Coca-Cola with a P of 44. I should have known better. He was priced to return 2-point-something% by my previous analysis. And if Coke doubled its earnings, how hard would it be for Coke to double its earnings in real dollars? It's probably never going to happen. You can't double the sales of Coke. You could buy up other companies, but by the way, that takes money. So you're really just buying a company, getting a razor-thin arbitrage benefit from it. To really grow wealth and double Coke's profits in real terms would be not imaginable to me. So Coke was designed. Coke is a royalty trust. It puts out a cash flow. And he bought it priced to put out 2-point-something% cash flow. He owned it, and he didn't get rid of it, and he was kicking himself for it. So did he get rid of Bank of America because it's a lousy cash flow? Maybe. Did he get rid of Bank of America because an Apple? Do you know who's taking over for him? Has that been announced? Because he's old. He's going to die. That part we know. And he tried to put a guy in charge, and then he fired the guy because the guy was doing all sorts of crooked trades. So Buffett's heir apparent, this wise old man, he chose a crook to replace him by mistake. And then it turns the guy had been trading off his shit on the side, and he fired him. So he went from being the heir apparent to being fired. So who's going to replace him? I don't know. Could be Buffett's going liquid to give whoever his heir apparent is optionality, so that he can build, that person has the right to build the company they want.
I guess what I was getting at is you don't think there's smoke there in terms of more systemic risk to the banking sector?
Could be. I don't know.
You brought up, we've been talking, a lot of the topics are conflicts of interest, and how I bring this up because another tweet of yours that I liked is you make the case is that we didn't used to see conflicts of interest, and now it's just become like normal, as in the case with Tom Brady.
Oh, you saw that tweet? A friend of mine, John Ziegler, was when he was on the sports show.
Yeah,
and he
but the
talked about
bigger
that.
point is that I think the bigger point, is that yes, he's now extremely overpaid commentator and now owner of the Raiders. But I think the bigger point that tweet was making was that the conflicts of interest, the lines have become so blurred today, Dave.
The end of the American experiment is potentially the argument, right? Society, I'm not religious. I used to say I was an atheist because I used to think religion was damaging, and I have matured and come to the conclusion that no, that's not true, and every society has always had them, and so there must be some reason. There must be, as Brett Weinstein would say, if something persists for thousands of years, there's a reason. And so religion serves a purpose. And one of the things it does, it produces common interests, common values, things like that. So what I realized is that although I'm not Christian by any sort of operational sense, that I benefit enormously from Judeo-Christian ethic. Who they is, I don't know, have managed to push religion to the perimeter. And now being Christian is synonymous with being a white supremacist.
Mm-hmm. I had a very in-depth discussion. It's very bizarre with two separate people. If this is all just a simulation that we're living in, and I've kind of taken a deep dive into this. You're like, you did not expect me to go there. But I was just, and I know this is a separate segment on its own, but as a chemist,
this mug that everyone comments on, this mug, it only holds 20 ounces. You know what's brilliant about this mug? I've never tipped it over. Keep going. You were on an important point. I started talking about mugs. Keep going.
What if we are just part of a simulation? Do you believe at all in that theory?
Well, without going there, you can also say we're just a statistic. We're on this earth for about 80 years on average. I drive past cemeteries. No one knows who those people are. They're just dead guys. Or as we used to joke, they're dying to get in there. And so you have this window you get to play, and then it's over, right? There's a famous phrase about you die twice. The first time is when your heart stops. Second time is when someone utters your name for the last time. And then you're officially just part of the geologic record. And it'll take a while for me to get to that second one because there's just too much data out there now as a scientist and as a podcaster and stuff. So my name will be uttered for a while, but it's odd. Someone was asked when they died, when they were dying, what's important. And the person said something that's very important. I've read a number of deathbed regrets. I'm not morbid, but I do want to know what the old guys say, right? When all is said and done, no one has ever said, I wish I'd gotten my email box empty. I wish I dealt with all those emails that had built up, right? No one ever says that. The usual, I wish I'd spent time with the kids, things like that. One person said, I wish I'd not worked so hard. And it did strike me that we're obsessive about working. I have a job that I loved. So that's not a regret that I would ever state. If I had my first choice, I'd be in my office at 9 o'clock in the morning on a Sunday with my dog at my feet, or one of my dogs at my feet, and my computer. That's my man cave. So that wouldn't apply to me. Someone said something very clever. They said, enjoy every sandwich. So you're wolfing down this egg salad sandwich, ignoring the fact that this thing tastes really good. It really is good. But you're too busy wolfing it down because you're trying to get to your next appointment or whatever. Enjoy that sandwich.
All right. Well, I didn't mean to take that twist, but
I never answered about the simulation. The simulation is probably, I don't sign off on the simulation per se. Are we monkey brains in a bell jar and someone's zapping us going, and somehow, but I think in some sense the human mind creates the simulation in its own right? We're just getting photons and waves into our heads, and we're interpreting them. We've evolved to interpret them.
Like I said, we need I don't know why I brought it up, because I know it needs and deserves its own segment. And I should probably do that just because I'm fascinated by the different theories.
You should do a multicast with several people.
Yes, and I know exactly who to call for it. And I know he's watching now. Okay, well, I'm going to make that happen. Last thing. This is where I was thinking of you. I told you I love talking with you about so many things. You always give me such great advice when it comes to parenting.
Mm-hmm.
And as you know, I have twin 4-year-old boys, and no, they cannot be on iPads.
Are they identical?
Identical. No, they cannot be on iPads. I really try and limit the garbage they're watching on television. But at one point, they go and watch Inside Out with their dad. Dad takes them to a movie. I was staying home doing whatever. And I was like, what danger could be in Inside Out? It's a Pixar, Disney movie, right? Rated G.
Disney's got a bunch of pedophiles in it, so there is.
I know, I shouldn't say Disney. Whatever. I don't remember who made it. But it's a cute movie about emotions, and all the characters, if the folks watching at home know what I'm talking about. One is joy, one is happiness, one is anxiety. So now my kid, one of them, the more sensitive of the two, comes home and says, Mom, I have anxiety. And now he likes this anxiety character. And I get the gentle parenting and leading into your kids' emotions. But the big point I'm trying to get to is it's so hard to control. And I don't know why they want to already have these narratives, exposing our kids to these narratives. Should my child I don't know when I learned the word anxiety, Dave. It definitely wasn't at 4 years old. I don't think I knew it at 12. I don't think I knew it at 15. Of course, I knew the word.
Yeah, but you knew it emotionally, but you didn't put yourself in that container.
Exactly.
Yeah. Society now offers sort of stock traits and diagnoses. And I witnessed this the other day. So my younger son's 35, and he's wired. He's as wired as I am, if not more.
The violinist.
And it drives him to greatness, and he does great things. But there's also kind of an OCD thing there. And he calls me and he says, I was reading about autism, and I think I'm high function autism. I go, no, you're not. I said, but you are on some spectrum. The spectrum is the human element, right? It's an entire Roy G. Biv spectrum. Scientists will know what I just said. But he's somewhere out there on the sort of fringe where smart kids tend to be. So they and the autistic kids tend to be way out there, and you got the physicists who are like this big head with little bodies walking around carrying their head to faculty meetings, things like that. But he was so sort of pleased to see a list of traits that made sense to him, that gave him a sort of a category to be in.
All right. Thank you to America's favorite professor. I'm going to get T-shirts made for you, Dave, with that. Thank you so much. Come back soon. Love speaking with you. And thank you all for watching. We'll have more great content coming your way, so be sure to stay tuned to the Daniela Cambone Show here on ITM Trading. Thanks for watching.